If you earn money abroad, does Nigeria still have a claim on it? If you work remotely for a Nigerian company from outside Nigeria, who taxes your salary? And why is Nigeria suddenly giving tax reliefs to startups, fintechs, and creatives? Welcome to A Stitch in Tax Saves Cash, where we break down Nigeria's tax laws in simple, practical terms that help you stay compliant and save cash. I'm Olatunji Abdulrazak, founder and CEO of TaxMobile Online, and today we are unpacking Sections 12 and 13 of the Nigeria Tax Act, 2025, which becomes effective from January 2026. Think of these two sections as answering to key questions. First, Section 12 asks, if you are a Nigerian resident, what income can Nigeria tax? Second, Section 13 asks, when is employment income considered to come from Nigeria? Once you understand these two rules, a lot of the tax confusion simply disappears. Let us start with Section 12. The rule here is simple but incredibly powerful. If you are a Nigerian resident, Nigeria taxes your income worldwide. It doesn't matter where that income is earned. It doesn't matter whether the money ever enters Nigeria. And it doesn't matter if it's paid in dollars, pounds, or euros. Once you qualify as a resident, which generally means spending 183 days or more in Nigeria within a 12-month period, your global income becomes taxable in Nigeria. Let me give you a real-life example to make this crystal clear. Imagine you live mainly in Nigeria, but you own a rental apartment in London. You earn £10,000 annually from that property, even if that money never touches a Nigerian bank account. The Nigerian tax authorities still want to see it declared on your tax return. The key takeaway here is that residency determines your tax liability, not where the money is located. This is a major shift from the old mindset of if it doesn't come into Nigeria, it's not taxable. That no longer applies. Now let's move on to Section 13, which deals specifically with employment income. The general rule is that your employment income is treated as Nigerian sourced if any of the following conditions apply. 1. You are a resident in Nigeria. 2. Your duties are performed partly or wholly in Nigeria. 3. Your employer is a Nigerian company. 4. The cost of your employment is borne by a Nigerian permanent establishment. Or 5. Your income is not being taxed in your home country. In simple terms, Nigeria does not want salary income falling into a tax vacuum where nobody gets to tax it. But here's where the law gets really interesting and forward-thinking. Section 13, subsection 2, introduces a special exemption for startups, fintechs, technology-driven companies, and creative arts businesses. What does this mean in practice? Well, if a non-resident works for a Nigerian startup or a tech or creative company, and that person's income is already being taxed in their home country, Nigeria will not tax that income again. Let's look at an example. A software developer in Ghana is working remotely for a Nigerian fintech startup. The startup has a valid startup label from the government, and Ghana already taxes the developer's salary. What's the result? Nigeria steps aside. There's no double taxation. This is a brilliant move designed to help Nigerian startups attract global talent without creating unnecessary tax friction. It makes our ecosystem more competitive on a global scale. However, Nigeria is also very clear about situations where income must not escape taxation. The new law is designed to close loopholes. First, let's talk about Nigerian government employees abroad. If you work for the Nigerian government in another country and your salary is exempt from tax in that host country, Nigeria will still tax it. The government wants to ensure its own employees are contributing. Second, seafarers. If you are a seafarer and you signed your employment contract in Nigeria, your income is taxable in Nigeria, no matter where your ship sails. The point of contract is what matters. Third, what about Nigerians working abroad under treaty exemptions? If a double taxation treaty exempts your salary from being taxed in the country where you work, Nigeria will step in to tax it locally. This is to prevent what's called double non-taxation. And finally, Nigerians working in Nigeria for international organizations. If the organization you work for does not tax your income anywhere, Nigeria will. The message from the government is clear. Nigeria will not allow income to go completely untaxed. So, What does all of this mean for you? Let's break it down into actionable points. For individuals, you must declare your worldwide income if you are a resident in Nigeria. You should also understand treaty protections, but don't just assume you are exempt. Always check the details. For employers, your pay obligations now apply even to non-residents working for you, unless they qualify for that specific startup exemption we talked about. And if you are claiming that exemption, make sure it is properly documented. For Nigerians abroad, the rule of thumb is this: always check whether your income is being taxed somewhere. If no country is taxing it, it's very likely that Nigeria will. In summary, Sections 12 and 13 of the Nigeria Tax Act 2025 are all about closing loopholes, aligning Nigeria with global tax standards, and encouraging innovation without sacrificing government revenue. The balance is simple. The government wants compliance, but without killing growth. It's a modern approach for a modern economy. If this breakdown helped you make sense of these new rules, please like this video and subscribe to our channel. Stitch in Tax saves cash. Don't forget to turn on notifications so you don't miss our future tax insights that can save you money. I'm Olatunji Abdulrazak, and remember, one stitch in tax truly saves cash. Thanks for watching.